the sport craft and everyday struggle of the math. Finance and social class make this brother grasp at straws until I lose it all, stray from the path and laugh. What is it all for? Where's the encore? Burn bright and fast until there's no more.
Hey, it's the Danks here. I promised I'd follow up with a video about why the separation of money and state is a good idea. Let's start with something we're familiar with, the separation of church and state. That was a good idea because society recognizes that different cultures have different perspectives. And if we all want to get along, allowing one group to dictate their set of rules on behalf of everyone else was not an effective nor a fair way to govern people. You guys understand why protecting net neutrality is important. Precisely because giving special interest groups the power to decide which parts of the internet you should and shouldn't see would destroy the open internet that you know and love. So I'm here to make the case that money, the way it is today, serves special interest groups more than it does the majority of the people who use it. Alright, here we go. I've gamed all my life. Part of gaming is understanding the mechanics of a game and playing in such a way that gives you the best results. If the game has an exploit, where players can abuse certain rules to gain an unfair advantage over other players, that's what we call OP. OP is short for overpowered. If a game has a broken mechanism, the game becomes abuse the exploit, if not, play at a significant disadvantage. The most successful players use exploits that other players don't even know about. Alright, so far so good. Let's look at the game of Monopoly. Early in the game, it's the right move to convert cash to property. Late game, cash is king because you need cash to pay rents when you land on property. Some players are forced to sell the property at discounted prices to raise that cash. The game is then determined by rolling dice. No player has any significant advantage over any other. But how can you change the rules of the game to give one player an unfair advantage over others? We can do many things, but if we play the game of Monopoly the following way, we get something close to how our money works. Let's introduce player B, B for bank. Player B is allowed to make loans and take deposits.
Essentially, if we want to produce something, we need funding, so there's a role for banks in almost everything that's happening in the economy.
Rather than let cash idle, players can deposit their cash to earn interest, which in turn gives player B more money to lend out.
But what exactly is that role? I'd like to reflect on that. Banks are being thought of as intermediaries, but this is not really what's happening. Banks,
what are they then?
They're creators of the money supply.
Players can also buy and sell property on credit, which is to say that players promise to pay back the borrowed money to player B with interest at a later date. If you can't pay back player B gets to keep your properties.
One more thing!
Player B gets to lend out as much money as player B wants, as long as player B keeps a tiny fraction of other players' deposits.
The money supply consists to 97% of bank deposits, and these are created out of nothing by banks when they lend, because they invent fictitious customer deposits. Why? They simply restate, slightly incorrectly in accounting terms, what is an accounts payable liability arising from the loan contract having purchased your promissory note as a customer deposit, but nobody has deposited any money. So that much we've established. What about lending? Surely they're lending money. No, they don't. Banks don't lend money. Banks, again, at law, it's very clear, they're in the business of purchasing securities. That's it.
Okay, so the amount of credit spending on properties and hotels would quickly grow to multiples of the amount of money in existence. Property and hotel prices skyrocket.
Now then you have a problem. Why? Because you're creating new money, but you're not creating new goods and services. You're simply...
They're constant, aren't they?
You're giving somebody new purchasing power over existing assets.
As the game progresses, players will need more cash to pay off their debt. They'll turn to player B, who will also be short on cash. If nothing is done, all players will go broke, so player B gets another buff, quantitative easing. Player B prints more money to add to the money supply, and the players keep on going until the players go broke again. In this game, cash and property take turns to be the better option. This describes credit cycles in a nutshell. Can you see how player B can abuse their ability to control other players, and to accumulate a disproportionate amount of assets?
I think there's a structural problem. That is the concentration of the banking sector. So in the UK, 5 banks account for 90% of deposits. There's a general tendency when an organization gets large and larger and larger and gets very big, essentially decisions are made without accountability, and the temptations of power strike.
In this game, player B has complete control over the flow of money. Have you heard of trickle-down economics? Yeah, money has more buying power at the top of the chain than less as it goes around, and player B always gets first dibs. In real life, the beneficiaries are the fire sectors: finance, insurance, and real estate.
Because essentially, there is no value added, there's value extracted. And so, really, you need to subtract it from GDP.
Has the finance sector, the fire sector, has it become a cost centre? Because is there a sweet spot where it's actually serving humanity, society, and facilitating business? And when it becomes a profit generator in and of itself, it becomes detrimental to the wider world.
We can agree that player B is OP. Let's ask the developers for a fix. Problem is, the game developer likes to keep winning, and there's no other game to play. When the judge and advocate are the same entity, we've got huge conflicts of interest.
So the structure has become too concentrated, and what is badly needed in the UK is decentralization. One has to break up the financial sector and have much smaller units, because small banks, community banks, are locally accountable. You can't suddenly do a crazy project or big corruption.
There's a revolving door relationship between banks, who represent private interests, and policymakers, who are supposed to represent public interests. And the crazy thing is that we denominate our life savings, the entire sum of our life's hard work and labor, with money controlled by private interests. That's fundamentally unfair. Money, which player B can create on a whim and pass around, with or without the consent of other players. Value is intrinsically subjective. Who gets to decide the allocation of freshly printed money?
That can be actually positive for the economy as long as this money creation is in line with the creation of new goods and services, implementation of new technologies, and therefore adding value. And adding value in the economy is funded by this money creation. If that happens, and we're talking about business investment, productive loans, productive bank credit, you will have no inflation. These loans can also be serviced and repaid, and you have a stable economy without problems and with low inequality.
In real life, monetary policy tends to err on the side of easier credit creation because it's easier politically. No politician wants the ticking time bomb to blow up on their watch, so they kick the problem along to the next guy. We have to push hard to make sure that our policymakers are held accountable to us. That's plan A. If the problem is that private interests have co-opted the role of policymaking, then it helps to have a neutral, apolitical form of money. Hard money. In a hard money system, a player can't arbitrarily create money to push their own narrative. Historically, manipulation of money has been used as a form of pushing political agendas. All the way back to the Roman Empire, where money was repeatedly debased from gold to silver to bronze to keep the military machine going, until its eventual implosion. As recently as ending gold-backed currency, in part to prolong the Vietnam and Korean wars, which the public no longer supported. You guys understand the importance of net neutrality. Defend that. You guys know why the separation of church and state is a net positive. The next step is to neutralize money. Neutral money, where its monetary policy is transparent and doesn't change without your consent, is the reason why some people are ideologically in love with Bitcoin. Stay informed, let's build solutions, please subscribe for more videos, and peace out. I'll be back in my next video about how money ruined my profession of dentistry.
So I lower my shoulder, break the door, then run past roadblocks. Go fast, I don't stop till I see the bullshits in my backdrop. New horizons, yes, this brother flying, changing my view, making my own rules, defying. A Leonidas that didn't die, my glory is amplified, gonna live to the fullest my moment in time. Brief, before you know it, it can turn to grief. So I'm getting out of my seat because I feel the beat and stay honest through hardships regardless. Let's meet my